care how good you are in anything, you don't have discipline, you ain't nobody.
Right.
You're nothing without discipline. Because you give up on the slightest struggle without discipline. Discipline is doing what you hate to do, but do it like you love it.
Hey, everybody, we are here with Adam. If you are a trader that are trying to learn how to really be disciplined or build a fund or want to be a CMT or want to learn about technical analysis, whatever it is, Adam is your guy. How you doing today, man?
Yeah, I'm doing great, and I'd have to say that you're the guy as well. I wouldn't say I'm the only guy. There's lots of guys out there. We're both the guy.
There's a couple guys, one or
Yeah,
two.
there's guys out there. There's girls out there.
There's
The Katie
everybody.
Stocksons of the world,
Yeah. Man, it's cool. We were just off mic kind of chatting about trading and confirmation biases a bit. And I was wondering too, is like when you started trading, did you around looking for the perfect trader to model yourself after or the perfect guru to like learn from?
That's a really good question. Um, no, hmm. I wouldn't say there was one person. My friends, you being one of them that kind of know my story and my journey, many of them like to make fun of me because I'm one of these guys that's always kind of gone out and incessantly bothered people that were smarter than me until they would give me their ear and let me pick their brains. So, I mean, I wouldn't say there's any one person I modeled my strategies after, but I would say that my first ever mentor was a guy, ex-Merck trader, named Bob Kendall. He was instrumental in getting me started and kind of paving the way and getting me set in the right direction. I still consider him like an old family member to this day. Even though we don't get to talk as much as we used to, but Tommy Dorsey was then, I'd say, my second father, if you will, in technical analysis. He was a big help to me, as well as a couple people on his team like Ben Jones, Jay Gregnani, at Dorsey Wright. Then from there, I got into the CMT materials, and then it just went crazy. Then it was Paul Desmond, the late Paul Desmond. Behind my monitors here, I've got a picture of him and I on the wall. He was the president of Lowry Research, one of the most respected research firms in the world, let alone the country. So I learned a lot from him. I learned a lot from a funny story. I've learned a lot from Charlie Kirkpatrick. On the books, it's Charles Kirkpatrick III, but
Go into that a little bit because you told me about that before, but tell it for people who just don't know him or your story of going and doing that.
sure. I mean, John Murphy, who kind of is the founder, if you will, or kind of the godfather behind stockcharts.com.
Hmm.
And then Ralph Acampero. I'm screwing his last name up. Tip of my tongue. Anyway, Ralph is another godfather of technical analysis. He actually started the CMT Association, which used to be called the Market Technicians Association until a few years ago. Then Paul Desmond, who I just mentioned, Paul Desmond was the third of the four godfathers of technical analysis. If you don't call, of course, Charlie Dow, right? But he's not with us anymore. And then there's Charlie Kirkpatrick, who was the fourth. And the CMT actually back in, I think it was 2016, had all four of them up on stage together doing like an expert panel, and they called it the Godfathers of Technical Analysis, and it was really cool. But the story with Charlie is, I was sitting at watching him do a presentation. I never met him before. I was watching him do a presentation about DMI and ADX, and I'd already read his book, which he wrote with Julie Dahlquist, and he literally, like, if you're going to learn about technical analysis, Explained, which is the name of the book, is one of the many books that you should absolutely have on your bookshelf. So sorry about that.
Oh, you're good.
So there's anyway, so he's an author, he's a researcher, he for years as a trader. And after watching him do this presentation on DMI and ADX, I was so blown away by how he was using it to create strategies. After watching the presentation and talking to him outside, outside the presentation room, then we had this, the CMT had this, basically they rented a boat, they chartered a boat to go across to Ellis Island, and it was March, so it was not exactly warm in New York City, So everybody's downstairs on this boat, basically in the enclosed area, kind of hanging out, having drinks, cocktails, talking to each other. And I see kind of out the corner of my eye, I see Charlie go walking up the stairs to the top deck, you know?
Mhm.
So I kind of go through the crowd and creep upstairs thinking, I'm going to go pick this guy's brain again. You know, poor guy probably is thinking, I'm going to get some relaxation on the top of this boat away from everybody. And I go upstairs and bother him. So I go upstairs and it's just he and I'm just peppering him, you know, questions. And we got out together. We stood outside or we stood inside Ellis Island. I was still talking to him. And eventually I was like, all right, you know, I could talk to you for hours. I'm like, would you mind if after we get back home, if I scheduled a time to fly to your home and just pick your brain for a few more days? And he's like, sure, you know. So I literally booked a flight, I think in June, to Kittery, Maine, and technically into Providence, but and spent 3 days with him in what he calls his greenhouse, which is literally a greenhouse, not his home, but it's like a clubhouse that he has on one of the many bays in Maine. And so you've got all these fishing boats coming in and out constantly, and these, you know, glass wall of windows, and CNBC is on the corner. There's all these tables. You can tell this is where people come and hang out and play cards, and there's a kitchen. But we just sat there for, you know, lunch, dinner, went out to eat. And the whole time I've got my laptop out. He's got his laptop out. I'm like, what do you think about this? Here's an idea. Here's a system I put together. And he's like, well, you could do that, but you got to think about this. And, you know, or no, that's not going to work. And here's the reasons why. And then, you know, he's talking about some other, what we called a double hook DMI strategy, where when DMI negative curls south and DMI plus curls north, especially when ADX is trending up through DMI positive, that it's like this trading strategy on the OEX was just ridiculously profitable. And so I don't know, it was just I would, like I said, I mean, I even since then, even since Charlie, I mean, I have so many people that I would call mentors, and no, I would say no model trader per se. But I think that that's probably one of the best things you can do for yourself is talk to a lot of different people, and not only learn from them and understand that you can always learn something, even from somebody who's newer than you, but also share your mistakes before you share your successes. Because what's it, Jay-Z that said you never learn anything from success? So, I mean, share one of the best things about market technicians is, with the exception of Twitter, maybe most of them in person, all you're going to hear about is about the mistakes they made and what they could have done better and what they did to fix it. So I mean, I've got lots of friends that I would consider kind of pseudo mentors. You know, this would be people like you know, JC Peretz, Dan Russo, I don't want to leave anybody out here, David Cox, David Keller, tons of people that you can follow on Twitter that are great follows, and, you know, just good people that know their stuff.
No, that's great. And mainly why I wanted to go through that story is because there's so many new traders on here. I mean, even I told you my nephew's even on here, you know, trying to learn how to do things like that. And like that story is great because I don't think a lot of people have that drive to be like, I want to learn this. How do I learn this? Oh, hang out with the best guys in the room.
Yeah,
People always ask about, you know, addiction per se, and say like, how do you get clean? Well, you don't hang out with drug addicts. Like, you
right.
probably hang out with people who've gotten clean, you know, like
Touche.
obviously, you know. So it's like, you hang out with the winners, you'll be a winner.
Yeah,
And I think it's really important to just understand how you went through that story, and or how, yeah, when you went through that story, just kind of grasping that, understanding that, hey, like, we're also mainly looking at our mistakes. I mean, I know for myself, one thing that was tough for me as a manager wasn't trading, wasn't my models. It was something that I never expected, which is my size changed. And when your size changes, you have to change a lot of things about your trading, especially in the futures market. You're using so much leverage. And so, like, having good people to go to for me, or like knowing the sources, like, hey, like, I probably need to talk to a Jerry Parker, Tom Basso, someone to just kind of understand, like, hey, like, when you're running this amount of size on a trend following style strategy and the returns start to change, why does that happen? It's very easy to see
yeah,
that, why now, but at the time it's hard. So, like, you know, things like that, where it's not just only trading and only your strategy. Sometimes you got to ping ideas off of people. Sometimes you just need someone to look through your mistakes with you and say, dude, you need a break. Like, you
yep.
need to stop. I had a
You
buddy
feel
of
like you're
mine
on an
tell
island
me,
a lot.
Yes, I had a buddy of mine tell me, you know, when if you get to a point where you're like, I can't stop, like you need to stop.
Yeah.
If you get to a point where you're like, I know this is supposed to happen, I'm just gonna hold on to this trade, like the no, that's a
Yeah.
huge no. And like little things like that in the early years of my trading really like helped me to get to where I'm at today. But without those mentors, without the people to chat with, without those fun conversations like me and you have, just going out to eat and pinging things off of each other, that doesn't happen.
Yeah. I feel like so much of what being a money manager is, managing money, trading, being an investor, is so much more of it is emotional than it is knowledge. Don't get me wrong, the knowledge is crucial. I think there's a lot of people that would argue with me and say you're crazy, that you need the knowledge. But I feel like you can have all the knowledge in the world, but if you don't have your mind in check, if you don't know yourself, if you don't understand your own cognitive and behavioral heuristics and biases that you're subject to, if you don't understand the difference between behavioral and cognitive heuristics and which ones you can fix and which ones you can't fix, and if for the ones you can't fix, under just knowing that while you can't fix them, you can be aware of them and recognize when you're falling subject to those heuristics, so that you can, you know, change your behavior at that time. Because I feel like more than anything, I think it was like I said earlier, I didn't want to leave anybody out of my list, and maybe I'll drop a bunch of names of Twitter follows at the end of this of people that I follow on Twitter. But Andrew Thrasher was the one that you know, real close friend of mine in the business and portfolio manager. And I remember, I'll never forget him saying this, but we were chatting one day, just like you and I chatting right now, and he's like, you know, the day I figured it all out was the day I realized I'm always wrong. And I'm like, what do you mean? He
Yes.
goes, well, I'm always going to buy too much, too little, sell too much, too little, and I'm always going to trade late or too early. So you're always wrong. And as soon as you realize that you're always going to be wrong, then everything's so much easier. And that's again, I think that's one thing we mentioned on on part one of this episode of this podcast, was that the idea of being wrong is not a bad thing. It's if you were right all the time, then you're lying and you're trading paper money anyway.
Yep. And that's the difference of being an analyst and a trader. Like as an analyst, sure, you can sit there and be like, hey, I'm gonna just be long now, and I know that the Nasdaq's gonna hit all-time highs by the end of the year or something. As an analyst, that means something to them. To us as traders, it's meaningless. Like
Nothing. Yeah.
we don't get paid because we think things.
No.
And our clients don't make money because we think things. We get paid because we're in the right trades at the right times. We continue to execute. We know we're wrong, so we get out.
Yeah.
And so when you're sitting there, like Andrew mentioned, and he's a good dude too, I'd love to talk to you more about possibly having him on one of these
Oh,
days
sure. He'd love
too.
to do it. I'm sure he would.
He's good. I love his work. And so like just thinking about like just him sitting there and being like, I'm always wrong. It's not that you have to, you're not going to be wrong every single time, but that mentality allows you the you almost get the permission in a way to just get out of the trades. Whereas you got
Yeah.
all these people who like, you know, I watch really good, smart people lose money in the markets all the time because they think they're so right all the time.
Yep.
And it's like it's not even anything about that. It's the thing we were talking about earlier where it's like, hey, how do you do this? How do you do this as a trader? How do you do this? Why do you do this? Why do you do that? None of that really matters. It's my ability to get out when I'm losing money, my ability to hang on to a profitable trade by getting out before it goes back to zero. All of those things are way more important than just my, hey, I can pick really good stocks and sometimes they make money. Like that means nothing. Like it's
Yeah.
meaningless once again.
And what's so scary to me, and I don't really have to worry too much about this, thankfully, but I just observe it as we're talking here, like on Twitter, for instance, is when you were saying earlier that analysts will say this is what's going to happen to the Nasdaq by the end of the year. Here's our target, whatever, and you and I are like, we don't really care because that doesn't mean anything. It's not actionable. Even but people listen to that, and if you and
Yes.
I were to say, like, if somebody put a gun to my head, and no offense to reporters, but it's always reporters because that, you know, nobody cares, frankly, about the supply and demand equation. Nobody cares about what the trend is or what momentum looks like right now, or whether the volume was paired with or the breakout was paired with good volume or not. Nobody cares. What they care about is with why. And you can make a story up for anything. I mean, really, you could just make it up, you know,
Yep.
and it'll sound good. It's like, have you ever, by the way, have you ever looked at if you can this would be hilarious if we can post this on your podcast, the link. Have you ever looked at StockCat's um
No,
headline generator?
no, I have not.
If you could go to stockcats.com and share your screen right now. I'm gonna go there too, but I think it'd be better if you share your screen.
Okay. Let's try it.
Stockcats.com. And if you go to
Hold on, I'm getting there. Let me share my screen.
in the middle of the screen on his homepage, as you go down, he has this he has this yeah, there we go. The narrative generator. This is exactly what I'm talking about.
The narrative generator. Oh my
Okay.
God,
Now
there's an
hit the
actual
drop
narrative
down.
generator.
Click the first one. Now, so start with, here's the thing. Now to the next one. Click on, there's no alternative to stocks.
Oh my God.
Click on that.
And
Go ahead and click on it. But, and then pick something. It doesn't make a difference.
here's a okay, there we go.
Yeah, so there's your narrative for the day.
Oh my God.
You do it every day. I don't know how many combinations there are, but this guy's hilarious. I think he's got like 20 million cats that run out of his house fully trades. But
Oh my
he's
God, man, that's wild.
isn't that
And
funny?
it's like that's the truth. No, that's funny because and it would have been even like funnier if I like went to that every day and it wasn't. I was like, yeah, that's actually what I do.
Yeah,
But it's
I
like
think
no, like that's wild.
this
Wow.
guy, he won't reveal his true identity, of course, but I feel like he gets a little bit of credit for being the first chat GPT. It's kind of like it's not quite AI there, but you know, that's kind of generating information from nothing, right? But
Yeah.
it'll always work. Just come, I don't know. Anyway,
Wow. Well, that was interesting.
yeah,
But that it's the truth, right? Like, so if we're traders and we sit here and like, for example, I could have a buy signal and copper gave a buy signal last week or so, or, I could come up with any narrative I really want. But what's the exact things that make copper go up or down? Like, and whether you really want to dive into the fundamentals, that's fine. Like, that's not what I do exactly,
right.
but that's fine. But like even something like, okay, supply and demand numbers, these are all important, but the market is so forward looking. It's kind of what I had Trader Vic on here once, and Trader Vic talked about like, the fact that when you're looking at all these fundamentals and you're going like it has to work, like copper has to go up, all the fundamentals are right.
You already screwed yourself there.
But also if something changes in the interim, let's say you actually are right, you get this fundamental picture, something changes in the interim, you can't figure out that change without looking at the price. The price is just falling out every single day. Something has changed in your fundamental picture. And so if you're not looking at the price, you're not going to make money. And this has happened year after year. You've watched big hedge funds lose money in all types of different ways because they're like, this has to happen. And really, the markets show us every single day that nothing has to happen and anything can happen, and it'll do whatever it really wants to do.
Yeah.
So it's the primary reason why any good trader I've ever met, they've never have ever told me they know which stock will be or commodity or whatever they trade will be their biggest winner. This is something that continues to come up again and again in conversations I'm having with people. Why do you because I say it so much, I don't know where my biggest winner will come from. I couldn't have told you this year orange juice would be where it is. I couldn't have told you cocoa would be where it is, or Bitcoin, whatever it is. Like the big winners I've had, I couldn't tell you any reasons for any of that. However, people, when you say that out loud, people go, well, like obviously he doesn't know anything about trading then, because if you know the supply and demand figures for blank and blank, you'd obviously know. It's like, no, when orange juice was actually there, and I actually do look at the fundamentals, I am one of those people who looks at them and then really kind of clicks the price because
Right.
that's what gives me my signals. But I do see the fundamentals for all these things. There was nothing telling you that orange juice could have gone to here today. No. There's nothing. And there's no way to hold on to it based on looking at what you can look at fundamentally. But there is a way to build a trend following type model to just hang on to a trend.
Yep.
And so I don't know about all the things in between, but like you said earlier, keeping it simple is incredibly important. So I just go, hey, the trend is up. Hey, I'm in the trend. Hey, there's relative strength.
Hmm.
That's
It's
it.
funny when you say that, because for me, I talk about emotional and behavior, and every time I hear anybody say something like, um, well, the fundamentals, or if you look at the PE ratio, if you look at the supply and demand situation, if you look at fund flows or something like that, I immediately it's like something snaps in my head. I immediately get so impatient because I just don't care. And
Hmm.
I have to almost check myself and go, hold on, like, this person clearly isn't in the same camp, in terms of what they do and how they do what they do. So that doesn't mean they're wrong. It just means they do things differently. So you almost have to like slow down and say, okay, let's have that conversation. Of course, the truth is I'm not going to have a whole lot to add to it,
Yeah.
because at the end of the day, for me, it's price, momentum, volume, and trend. I mean, that's kind of the four things that matter most to me. And while there are other important things, it was like, you said, so and so, this, if somebody says this has to go up, I've done the analysis, this has to go up. I remember it was Bob Kendall actually that said to me, anytime you said to yourself, in any trade, I like, I think, or I hope, you've already lost. Like, you're
Yes.
probably going to lose that trade, because if you think something's going to go up, that nobody cares what you think. The stock
Hmm.
doesn't care what you think. Coco doesn't care what you think. If you hope it comes back to even before you sell it, well, Netflix doesn't care what
Hmm.
you hope, and Netflix just wants you to watch more documentaries and more Matt
Yes.
Rife, you know. um, and it doesn't, I mean, anytime you say you like an investment, I mean, you're immediately married to it. It's just an investment. I think it's JC. It's always thought they're just stocks. Like, who cares,
Hmm. Yeah.
So I don't know. I'm looking at commodities here, gold breaking out. It looks like lumber's actually starting to build the right side of its base.
Hmm.
Commodities as a whole look terrible. Like a
Hmm.
general commodity index looks
Hmm.
ugly.
Because
Um,
they're all oil.
yeah,
The
it's all
main
energy
index are
based.
just all energy. So.
Palladium's ugly. Natural
Hmm.
gas looks terrible.
Hmm.
But
It
yeah,
did look good. It gave a buy signal and then came right back to a sell, pretty quickly. It did get slightly into profit and then got stopped out,
yeah.
which will happen. But once again, if you're looking at natural gas, you have to all the different contracts look totally different. So it's a
Oh
weird
yeah.
one.
I'm just looking at continuous, but yeah.
Yeah. But if like you said, like looking at all these things, you're like, okay, well, where can I position myself to make money? And then you're going, okay, well, then I have to be in these trends. It's as simple as that, like it's not, if you go in and you're looking at the PE ratios, even though that stuff, fine. I don't even think it's unimportant. It's not that I think it's not important. I think it's fine to look at that stuff. However, you can have the best PE ratio in the world and find out the best stock in the world. But if there is no relative strength, no price breakout, no 100-day high, whatever will you use, like it's not moving the right direction to make money. So like number one, it has to move the right direction to make money. So many people look at like traders like us and go like, oh, well, you guys just buy all-time highs. Like, no, not really. I mean, you could. Um,
Some people do. Like, I
yeah, some
know,
people do.
Irusha
But
Irusha Paris at Market Smith at IBD.
yeah.
Irusha loves buying breakouts, and
Mm-hmm.
he's good at it. I'm
Mm-hmm.
not.
Mm-hmm.
I'm not good at that. I mean, I like buying pullbacks. I like looking for higher lows to trade off of.
Yeah.
I like to for an investment to prove itself before I buy it, and that's
Mm-hmm.
probably more conservative than most, but that's just me. I mean, it works for me, and it's not wrong, and somebody else isn't wrong either, right? I mean,
Yeah, I mean, there's just many ways to do it. I like breakout tradings. I like certain
mhm.
amount of day highs. I like all of these things a lot. But at the same time, breakout trading doesn't mean all-time highs. Breakout trading doesn't always mean things like that.
Mm-mm.
But at the same time, like I remember there was a guy at a fund I used to work with, and he literally bought nothing but 52-week highs, and he made a whole
Huh.
career off of
Nothing
it.
wrong with that.
Yeah, he made a whole career off of it. Now that's something that's longer term than I would do for my breakouts, but he did it. He did it well. He made money, and like there's all different types of ways to do this. However, the things and I think this is one thing we could get into to talk about too, which is what's the similarities you see in good traders? People who've been doing this for a long time. What do they have in common with other great traders?
I think that the characteristics of a great trader or investor is somebody who uh, is nimble. You mentioned earlier, you have to, if you've got an investment and you're long and you've got your stop in place, you've got to follow that stop. Something I was going to follow up and say, I didn't want to cut you off, is but if that same investment recaptures that line in the sand, you have to be nimble enough and confident enough to trade up. Like there's nothing wrong with, like we said last time, a good loss and then buying it higher again if it still looks as good from a momentum, relative strength, all the characteristics you're looking for from a what to buy standpoint. If the when to buy characteristics are back in play, but you just sold it at a loss, there's nothing wrong with turning around and buying it right back again, because it might be that second trade that ends up being the big winner. So I think that being robotic, having rules, and in many cases for most, well, I writing them down. It's kind of like people say that, if you have more than 3 priorities, you have no priorities. And if your goals aren't written down, you don't have any goals. So I think it's the same with rules and trading. I feel like if you don't have them written down, you're probably going to be subject to the same mistakes you've made in the past. But I would say discipline, being robotic, unemotional, having your rules written down, sticking to those rules, try never to have an opinion. I think most good investors, good traders don't have opinions. They just trade what's in front of them. And one of the worst, well, for me, I hate when people say, what do you think is going to happen? It doesn't matter what it is, fill in the blank. What do you think gold's going to do? This between now and the end of the year. I don't know. I have no idea. What do you think? What am I looking at in front of me right here? What do I think Amazon's going to do? Between now and the end of the year, because Christmas is coming around the corner. Somebody just said to me literally this week, I've made so much money in Amazon, and I'm thinking, Amazon's at the same price it was in September of 2020. It hasn't gone anywhere in more than 3 years. So unless you bought it, in 2019 or 2018 or 2017, whatever. But unless you were able to watch that stock go down from, 180 to 75.
Yeah.
Which I couldn't, I wouldn't be able to do that.
Cut in half,
Yeah.
like even more.
What do you think? What do you think about characteristics of a good investor, good trader?
I think it's, you nailed them in general. I think the other thing to think about is like what you talked about in full is really probabilities. We all kind of get into probabilities. It's kind of like, and not having opinion, and it made me think of like all the questions I get from people, and it's like, this works for me, it works well for me, like, but it's also the fact that I just understand I'm getting the probabilities on my side. You talk about Amazon. Hey, what do I think Amazon's going to do? I can't tell you. I have no idea what it's going to do by the end of the year, or any other stock for that matter. I can tell you the probabilities. If a stock is in an uptrend, the probabilities it might go a little bit higher. If the stock is coming into a seasonal period, there's a possible Santa rally that's possible at a higher percentage than other months, let's say. And like all of those things, like, sure, like I can just rack up probabilities and volume and whatever, like fundamentals, even like I can put that all together. But I know at the end of the day, it's the price action that, and my discipline to enter and exit, and the price action that makes me money. If I don't have any of that, none of the other stuff matters. Like, and that's a thing that I think too many people try to do in trading, is figure out what's going to work and what's not going to work. Like they go, okay, well, cocoa, for example, I remember there was a post I posted probably 2 or 3 months ago, and it was about cocoa. And cocoa's rallying, like crazy at the time, and everybody's going, it's over. And like I had, number one, the signals were all long. And there was a bunch of other probability reasons and positioning reasons and all this stuff that I also look at that were telling me that cocoa could go higher, and more normal people at that time would say, okay, hey, look, you made all your money in cocoa. Why don't you move to this commodity that's worthless right now? Like, let's say, oil is down a lot. So I'm going to buy oil instead because I've already made so much money here. And I think as good traders, like, we know things can always go higher and things can always go lower. And we have the discipline to really ride those trends and be okay. Also, the thing you also brought up, which was great, and I think it's something that so many people have so many problems with, which is when you have an uptrend, and let's say it finally hits an exit signal. The NASDAQ, for example, for me is one. In short term, it hit an exit signal, got out of the trade, and then it gave a new buy signal. So you have a choice at that point to go, oh man, it just stopped me out. I just lost, like, it wasn't a loss. It was a good
You
trade
made
still.
money, but you're out of the trade.
Yeah, but I'm out of the trade, and you have a choice. Do you want to get back into the trade?
Yeah.
Or do you want to just say, hey, like I made my money in it and walk away? Now you can do two things, but if you're like me and like for me, I'm running a lot of these things systematic, like you just got to get back in. There's your new signal, you got to buy again. I think so many people have that trouble with that because they're either hurt by it. I always use the energy thing from 2016 into 2020. Energy kept in this downtrend, and everybody in the world was so mad at energy. Like people fight. It's not even it's just a stock, and it's stocks. It doesn't mean anything, but they're mad at it. They're hurt by it, and then it starts going up and giving every single buy signal possible in November 2020. Fundamentally, technically, whatever you wanted, you had every buy signal you could ever dream of for energy. Most of those people that were my friends and friends that were also fund managers and so on, they didn't touch that trade. And they told me how stupid I was for even like, now, number one, me and you, like, it's like, okay, it just gave me the signal. It meets my criteria. Like whether you're technical, fundamental, whatever, it meets my criteria. That should be the end of the trade. You put it on, meets my criteria. Great. And they're going, well, I can't believe you're in this. This could happen. Most of the time when I get those messages, I'm like, my trade's probably going to be great. And most of the time it is when that happens.
Contrarian.
And I'm total contrarian in that. And I just that's how I just live in general. But I'm getting all those messages. As much as I want to be like, hey friends, like let's like see it from my angle. I'm like, I don't care enough to explain if you don't care enough to even listen to me anyways. I don't want to. So you're watching that trade, and that was the trade of the next year. Basically, it started that year, it ended the year. I had the best 2 months I've ever had in those 2 months. And then all through the next year, energy was great in 2021. It was the place to be out of everything else. It was the one sector that just continued to rally the whole time. So, it's funny to think, like, I think that's another thing, is the ability to go against the crowd. Like if you can just go like, hey, like I'm just the one person here that, is in this trade, and everybody else is telling me I'm stupid, but it meets my criteria.
Yeah.
Like that should be
That's
the
the
end
crucial.
of it.
That's the key though.
Yeah.
I mean, I would not encourage people listening or watching this to take from what you just said, be a contrarian and always find stuff that nobody else is doing. I would not do that either.
Yes.
There's a reason that there's a reason it's called trend following. I mean, it's, we're God, what was it? I'll find the quote for you, the Warren Buffett quote, before we're done today. But it's we have a thing here that we say that when we start, and then I've been doing this for 22 years now, so we've been through 3 big bear markets and a bunch of whipsaws in between. But we always joke that when clients call us and start selling us that they're ready, that they'd like to take a chunk of their money and invest it on their own, that's a sign the market's topping.
Yes.
we know we're close, So anyway, I got to find that quote for you here, but go ahead.
No, that's great. And it's the truth. When you're looking at that, and yes, contrarianism is 2 things. One, some people think that means when the market is just crashing, just buy. And once again, people have learned over time that buying dips just always works in their head, and it's just not the way it really works. So if you're thinking about COVID and that crash that happened, most of the time when your friends start hitting you up was the shutdown just started, it has crashed 15%, and everybody's going, I gotta buy right now. And it's like, no, like you can wait until it hit bottoms, and then it turns up and makes a higher low, or you could do a bunch of things. And so even if you waited till it made that higher low and then broke out of that higher low, you still made a lot more money than that 15%. You still got in at a better price than that. And also you didn't have to ride that volatility. You don't know how you're going to act when you put on a trade and then it drops another 20-30%. Like number one, that's terrible risk management. But number two, like
I was just
your
going to say,
psychology. Yep.
In your time frame, another thing, conversation that I think that could be had another day, and this is a whole episode in its own, is time frame. If people, I feel like that's the first thing you need in investing or trading, is you got to know your time frame. You got to decide and you got to stick to it. Like you're shorter term than I am. That doesn't mean your way of doing it's better or mine's better. We're different. It's like Brian Shannon. Brian Shannon is one of the best traders I know, and he is a swing trader. That's way too short term for me. It's just not my thing. Is he profitable? Like ridiculously, yes, but it's not my time frame, and it's not my client's time frame. So I think that one trade
What
that might
is
work
your
for you,
time frame?
I would say intermediate term. I'm like when I'm looking at average hold times, probably 6 to 12 months. But that doesn't mean that I might own something for 3 weeks sometimes, and that doesn't mean I might own something for a year and a half either.
Well, we're similar in that sense then. That's
we?
Probably, yeah, that's my average hold time too.
Okay. Yeah.
So we're similar in that sense. It's also harder, like a lot of people just in general, when you're in commodities markets, like most people wouldn't think that you can be that long term.
But you catch a nice trend.
Yes.
If you look at the weekly charts instead of daily charts,
I do, because the daily would drive me insane because the commodities are insane. But once again, then that becomes another episode, which is the sizing thing.
It could go on forever, couldn't it?
Yep. As I'm commodities, I have to size smaller. If I'm in stocks, I can size a little bit bigger. Like it's all these things, and understanding the volatility of the products. But just through all that, like number one, it's like if you want to be a good trader, number one, like yes, you have to understand your discipline, all those things. Like we talked about the psychological aspects, but as a trader, number one, you have to understand your risk management. One, if your risk management isn't correct, you're never going to get into those trades and be able to hold on to them without your psychology jumping in and telling you got to do something differently. So if you continue to, I meet so many people who say these things, and it's like, number one, like if everything's a 1% loss in my portfolio, then why do I care what's going to be the best trade or the perfect trade? There is no such thing as that. I thought a million times when I first started trading, hey, this one's going to be better than this one. Oh, this stock's better than this one. Oh, I like this brand more than this one. That didn't mean one went up more than the other ever.
Yeah.
So one is sizing properly so you're not driving yourself crazy. And then, like you said, two is like finding the winners to be around. Like if you're not surrounding yourself by people who are good traders and finding a good group of people to be in, or you're listening to some guru in finance who's telling you like Motley Fool or something, like the world's going to end, it's crashing, everything's over. Like understand these people are trying to sell you a service. Right. They're not trying to make you a good trader. They're trying to sell you a service and keep your confirmation bias going. If you think the world's going to end all the time already and you like to be a bear all the time, there's a lot of research services out there for you, and they're going to make a ton of money off of you, and you're not going to make anything from them.
Yeah. It's I just saw a quote today. Let me pull it up here. It was I think Callie. Let's see. Yeah, Callie Cox. Pessimism makes for good stories. Optimism makes for good portfolios. It's I think that once I think you have not only putting yourself in the right room with the right people, but and nothing against people who write letters or sell services. I think there's lots of good ones out there, lots of good ones, but there are lots of bad ones, and there's lots of ones that are doing what you just said, just trying to sell their service, just trying to sell their service, and then using fear mongering as a way to keep you paying attention, which is what financial news does essentially, But I think getting yourself in a room full of people that speak truth, which means talking about their wins, but talking about their losses, kind of full circle here. We started talking about, how technicians are typically people who, when you talk to them face to face, they're going to talk about their mistakes first and what they could have done better. I don't want to say regrets, but we call when every time you make a mistake, it's tuition, right? This is how we learn. How do you get better? Every time you place a trade, it doesn't work out. Look at it. What'd you do wrong? And understand it. Maybe it wasn't you did anything wrong. It just the trade didn't work out, because not all trades work out. But the quote I wanted to find for you, two of them actually. Everybody knows that, or most people listening to this probably know that Harry Markowitz was the founder of, modern portfolio theory and buy and hold and diversification and the efficient frontier. And, diversification works really, really well when the market's going up, but it doesn't work so well when it's going down, because all correlation coefficients come to 1 and everything goes down. I think we saw that in 2022 when the bond market was down, 16 to 18 on the AGG, the S&P's down 19, the NASDAQ's down 34. And what was up? Commodities. I mean, it's like this. I always call commodities the jalapenos. You build a portfolio. You've got your meat and potatoes. There's your stocks. International, domestic stocks. You got your glass of water that makes the the bonds make things kind of smooth. Make things go down easy. But as soon as you throw some jalapenos on the portfolio, everybody freaks out.
Yep.
But it was, and so Harry Markowitz, that was back in 1952, I think it was. Yeah, I think it was 1952, and he won the Nobel Peace Prize for modern portfolio theory. Then in 1993, Eugene Fama comes along and basically won another Nobel Prize for basically confirming modern portfolio theory, basically standing on the shoulders of Harry Markowitz. But he said in his paper, momentum investing, and read between the lines here, momentum investing is the main embarrassment of the buy and hold model. And what's that tell you, right? And here's the kicker. Here's my favorite quote of all time, not because it's a great quote, but because of who said it. This is the quote: "The disservice done students and gullible investment professionals who have swallowed modern portfolio theory has been an extraordinary service to us. In any sort of contest, whether it's financial, mental, or physical, it's an enormous advantage to have opponents who have been taught that it's useless to even try." Warren Buffett, 1988.
Yeah, I love that quote.
Isn't that great?
I always love that quote. Yeah, I haven't heard that one in years, and it's
hard to find.
Yeah.
I don't think they won it out. I don't think the mutual funds won it out. I don't think the ETFs won it out, because if you're an ETF, if you're a mutual fund, if you're an SMA, if you're a hedge fund, if you sell, they don't get paid. So, I mean, as my dad once told me when I asked him why there's so many cops on the road at the end of the month, he said, "Follow the money." So, I mean, follow the money.
Yep. It's very telling when you just understand that simplistic fact, especially the last few years. Like, how many people have you run into as a manager that have a major amount of bonds or something crazy? In 2020, there was so many people that would come to me, my fiance's mother being one, all these random people asking me about bonds and what they should do with bonds and buying more bonds. And every time it'd go down, should we buy more bonds?
It's a better value, though, Jason.
Yeah, obviously.
It's a better value.
And so they would just talk about bonds all the time. And the thing I kept saying, which was like, you don't know when they're going to have a 40-year bear market, because they did before. People in the last, people always are fighting the last war, right? So when we get to 82 to today, today it's changed, but 82 to 2020, bonds were great. You put your money away, very low volatility. The portfolio idea of, your 60-40 portfolio, you could just do that forever till you die, and you're going to be great. And then comes this type of market where the commodities are ripping everybody's face off and inflation.
But they're unsafe, Jason.
Yeah, but they're unstable and they're hard to trade.
They're unsafe. Bonds are safe.
I
had a client once tell us this years ago that their attorney told them that you should allocate the same percentage to bonds that you are as your years of age. So if you're 60, you should have 60% in bonds. If you're 80, you should have 80% in bonds. But meanwhile, AGG, last 2.5, 3 years, down 20-something%. Corporate bonds down 40. Long-term treasuries, zero coupons, down 50. Don't buy commodities, though. Not safe.
No, and it's also, the time, right?
Sarcasm, by the way, listeners. Sarcasm.
Yeah. It's also the time, right? So if you're sitting here and you're in, 1982 and you have the bond market just kind of starting out, great. Maybe your 60-40 portfolio killed it. That's the research they always show you guys. That's the thing. They show you that research. They don't show you before that because it didn't look very good in the years before that. So remember to understand, these people are, number one, still trying to sell you a product. And as they're trying to sell you a product, they don't care whether it goes up or down.
Mm-mm.
The people who care whether it goes up or down are the actual like active managers like us.
That's right.
And convincing everybody that the best thing they can do is just do this and walk away and not to try to do anything else, that hurts people. I mean, there's even simple portfolio ideas like, permanent portfolios or something like that, where, you can rebalance once a year and a little bit and add a little bit more to your portfolio and do much better than this 60/40 idea. There's so many different
Mm-hmm.
ideas out
Yeah.
there. I'm not saying I'm even like one to say that that's the best idea. I'm just saying there's a bunch of different ideas. Don't put yourself in a box like I have to do this or my manager told me this. Find some way to do it differently, and you're going to profit from that
Yep.
because nobody else is thinking outside the box. People are still trying to sell the 60/40s just as hard as before right
I
now.
know. Well, it's what's like one of the things when we first started talking today is that there's lots of right ways to do this.
Mm-hmm.
It's just a
Yes.
matter of finding one that works for you. And when it works for you, it's not because it works the best. It's just your personality type, the time you have in a day, the time you have in a week, how much interest you have in this stuff, what makes sense to you versus what makes no sense at all. Not to beat up Elliott Wave again, but I mean, if you don't understand Elliott Wave, then don't freaking use it. And by the way, my personal opinion, not that I'm right or wrong, is I don't think that you can trade with Elliott Wave personally. So I think it's yeah. Anyway, I digress.
There was a trader that I really look up to, and I always forget his name whenever I talk about it. He's the guy who created the choppiness index.
Hmm.
And so he is also a systematic trader. When he first wanted to become, he actually he's one of the
Bill
only
Dreiss.
Dreiss, yep.
Yep.
He's the only systematic trader who ever really tried to like figure out a way to use Elliott Wave
Hmm.
as a system.
That's some programming right there.
And he did. He tried to do it for a long, long time. And he, till this day, he still uses pattern recognition to make his trades. But Elliott Wave had to get tossed out because there was no way to do it.
Yeah.
There was no
So
way to do it.
subjective.
Yeah, it's just subjective and it's not profitable. And like that's what he found out. And like I always think back to that because that's a person who really wanted to figure that out and really felt like there was a way to do it and had to at some point just go, hey, there's no way for this to work. So only thing I've ever found in Elliott Wave that I thought was kind of neat was short waves falling, crashing out of short
Yeah.
waves.
Counter trends. Yeah.
Yeah, like so I found that kind of interesting, but once again, I can't use it. Like it's not something
Mm-mm.
I ever look at a chart and I'm like, hey, I'm gonna
No,
use that. It's
it's like you
pointless.
can look back at like July through October right now and say, well, that was a counter trend. That was like a 1, 2, 3 wave if you
Yep,
want.
that was
If
one,
you
two, three.
want.
Cool. Yeah. But
Awesome.
really try to make money on it. Try to sit there and go,
Mm-mm.
okay, well, 1, 2, 3 waves, I'm gonna buy here. Like try to do that. You'll lose money every single time.
Yeah, be
How do you
pretty
diagnose a wave? What's
or
big
or
enough to
worse,
be
you'll
one?
make money and you'll think it was because it worked and you'll do it again.
Yeah, either one or another.
Yeah.
All right, Adam, I know you got to get going, and it was great talking to you, man.
You too.
Let's do this again soon. I had a lot of fun doing this. This is cool, and we'll
Me
meet
too.
up soon
Yeah.
either way.
That sounds great. All right. Well, thanks for having me on again. Let's talk soon.
Of course.
All right. Thanks.